608, pre-market futures. Futures volatility, learn what futures volatility is versus market volatility. And the thing about it is, everybody's got an answer about futures volatility. They don't know. They don't. And why are we bold enough to say it? Because if you go back and look at all of our pre-market futures, just type it in there and look at what we had to say and pay attention, you'll come out of your denial. And that artificial price movements, as we said over the last 3 months, when the futures, and we got a very long gap of all the stocks that were sold down. The upside volatility gap, they were down 265 handles on the Dow last night. And what you're seeing is that upside volatility, the key is that in the pre-market is that once they go up on their individual levels in the SMF platform, the shorts do not have a lot of fear about covering this market. And just like a bull, they'll stay too long, and the bear at times, they'll stay too long, and that's good. But once again, when we were talking about the amount of 52-week lows being put in, and when we were calling the short up here, it was our third short of the year 2011. That was our first one on the S&P. That was the second one, and we had a 2-week reversal. This is the third week, but the 2-week reversal took it out on a percentage point move down than the whole 7-week reversal did. And this is how new bear markets start, or bear trends per se, versus bull. And that the weekly sell signals are in play. That means that the upside volatility up there at the higher delta ranges, you will continue to sell short as you have been doing for the last month over here at the top, and then the last couple of weeks in trade management, is that once they make their intraday highs, there ain't going to be no buyer there. And we said that 2 months ago, 3 months ago. There was going to be no buyer up at the higher level at resistance, and they come tumbling down, and that's where the short sell pays the money. Now, there'll be certain values in here in any cycle, mathematical cycle, that has an upside cycle to the downside cycle. And that if the upside cycle in the equity is much contracted, what do I mean by contracted? Less than. So if the upside moves up, but it's less than the downside, is that it takes a period of time to put bottoms in stocks and bottoms in indexes, because outside of the artificial pre-market gap is that stocks are going to have, when we open up here in about 20 minutes, stocks are going to have a natural gravity of the buyer and the seller, and we make markets in there, so that, and every gap up, as we said, over the last 3 months, you had some upside volatility, but no matter what, you were going to go down in flames. And that the short sells were down. The upside in pre-market is that when they make their intraday highs, that they were going to make much lower lows. We said it. It's on stockmarketfunding.com. Type in all of the analysis that was given to our MMTs. If you were an innocent bystander watching it, it will come clear to you. And believe me, you're not trained for the volatility. And nor are the day trading shops and all the other people who think they are. They're all probability type people, and guessing and uncertainty, and, you know, no systems to their stuff. This has got everything. So the amount of the futures trade and the moving forward as of today from last night's turnaround is that we've had some wonderful things happen this morning, is that the FTSE, the CAC, the DAC isn't positive yet, but those two are, and they were negative for most of the night. The Asian Pacific Rim was getting itself whacked. What we did here is that our futures got a bid. They were negative 265 capitulation and overnight futures that came back, and the Dow futures are now 134. 131. They were up 200. You've had a 465 point swing. S&P futures, which were down huge in the futures market throughout the night worldwide, is they have levered back up and they're up 16.8 on the S&P, and the Nasdaq futures are up 31.8, and that is why these prices move artificially. And remember, sell short. There's going to be certain days, though, that we can go much higher back up before we roll over. Because what that would mean is that the bear would want to buy to cover, meaning that they're short. There's only a very few people out here short. Most of them didn't know how to do that because they've been stuck on stupid in year 2011 and thinking it's going to be the same scenario and the same outcome. I don't think so. I don't think so. And as we said on all of our index analysis, that these big trends that happen just like they did in the 30s and all of these expansion and all these stimuluses and all your government interaction, they always end up in a bad way. They're good to take for a bull as long as it's willing to go, but then they end up miserably to the investor and the less educated people that do not have the right education. And then the people who think they have the right education, they find out they don't. So the trade management, once again, my friends, is at bottoms. The upside volatility, once we get up there, you will sell short intraday. That the way that the fear indicators on all indexes would stay elevated and hold the higher support levels from their pullback would mean that people are extremely what? Fearful and selling into any up move. And that's exactly what we'll be watching today. And this is the pre-market opening on the New York Stock Exchange that was making 1,100 stocks, and the NYSE were making lows yesterday, and there wasn't no advancers. So in order to gauge fear that is in the market, that anytime you get these pre-market volatility gaps up like this, is that people can't make heads or tails out of the market and they deserve to be punished. They're scared. They would continue to sell, which would keep the fear at high levels, and that the market's not putting the bottom in yet until we see, as of today, called futures volatility. Futures artificial price volatility. Now, it may be over some people's heads, but it's not over the MMT's heads. And for you so-called home gamers, as I hear on TV, you're getting taken to the woodshed. Why? Because you couldn't understand what that meant. You couldn't understand that volatility. You couldn't understand that volatility. And you couldn't understand when a new bear trend was going to go into it. And we called it. We called it long before the bear trend would even start, and why it was going to go there. And that is the kind of understanding that you need. All the other stuff, the volatility only increases because more people don't know what they're doing. Otherwise, you wouldn't have this volatility. And you would not have the volatility in the last three. If everybody knew what they were doing, you would not have the volatility. But they do not know. Nor do they understand it. And people go years and years and years and years in the stock market and never know what it's about. And then they end up in times like this. So we're going to talk about moving forward that the upside of the volatility will be sold short intraday, but we're going to be talking about how a bottom can get put in and how you can rally up and then roll over and go right back into the bear, just like I taught people in 2008. And if you don't remember what 2008 was about and why you got taken to the woodshed then, well, now it's time that you get on board and you learn. Well, you can always learn here because we do all our analysis before the fact, not after it. And the thing of it is, we said that people could not handle these markets, And the reason why we know that people can't handle the market is because of the volatility increases. Volatility only increases when a bunch of people out here in the world don't know what they're doing. Otherwise, if they knew what they were doing, you wouldn't have the volatility. The public tape, the public analysis, public standard this, public that, guess me to the wishing well. Oh, let me make all my wishes in the world when it comes to the market. I hear it all the time. But guess what? When it gets down to trade management and analysis, they wish themselves right into misery. New York Stock Exchange, 60% of the program trading happens right here. Upside to the deltas, roll over. We'll be talking about how markets put in short-term bottoms for short-term upside volatility versus their original downside volatility, and the sophistication in the trade management here and now.